Thank you very much. It's an honor to be here, especially with everyone in the room. I'd like to give a short presentation today as we are one of the newer working groups that are coming online. We really want to take an approach to share with you the finance and securitization, not so much from the academic point of view, but really the how point of view, right? What are we looking at? Why do we think we need to look at this? There's been many discussions in this space, but I want to share with you some statistics today as we go through this to build the case on why we want to move forward. So if we can get started. I want to talk a little about FinTech in itself. When you think about FinTech, there's 5,779 FinTech startups in the Americas as of February 2019. And that makes it the largest region in the world with FinTechs. In comparison, there were 3,583 FinTechs in Europe, and the Middle East, and Africa, followed by 2,849 in Asia and Pacific. But what's interesting about that is while the Americas have the largest number of FinTechs, from our point of view, it's not moving as fast as we think it should. There are many players in and out of the market. And so if we think about this movement within the last decade, especially the last 5 years, the financial technology startups have thrust themselves into the auto retail industry in droves. And we're going to take a deep dive look at that. And while experts agree that this transformation will be driven by technology, it's inevitable. But exactly how that will happen, we don't know. It's less predictable, and so we're going to explore that space. What we do know is that to be successful in the auto fintech business, we must have patience, internal expertise, understand the dealership operations, as well as the customer's expectations. In my experience with the OEM, with finance, you'll find, we talk about this and we almost kiddingly talk about this, that we build things that we believe are right for the market. And really, when we think about this space, we need to think about the market before we build it. So today, we're going to explore a little bit about the landscape and what we believe is the opportunity. And really, it's a solicitation to bring all of you forward as we think about this space. So I'm going to give you a little bit of history about RouteOne and why we're here. It started its journey in 2002, and I'm just going to put in quotes here. I've been with the company for 90 days after 30 years with Ford. And the reason that I joined RouteOne is really to think about this forward strategy and how we can move forward with securitization and finance. As was mentioned, RouteOne is a joint venture that originally started with Ford Motor Credit Company, Toyota, GMAC, and Chrysler. Our platform is open in a very complex industry. And if we just take a look at this slide, really the illustration here is to think about the purchasing experience from manufacturer to aftermarket. But we can't forget really the other side of the equation, which also includes regulation, taxing, insurance, and registration. Now, our platform, as I mentioned, is open, and we provide operations to 6 OEMs, 18,000 automotive dealerships, 200 plus DSP, dealer service provider integrators, and 1,400 plus finance sources. So there's a wealth of data coming in every single day. And if we think about the finance and securitization, this is where we're moving forward. To put that in perspective, we have about 1.75 million transactions per day. That equates to 264,000 credit applications each day and 23,000 e-contracts. If we take a step back a little bit and talk about the industry, the auto industry and the finance side of the industry, the U.S. sales remain strong, but we know that they're in decline. Right now, the SAAR is hovering around 17.6 million. It's about 1.5% lower than 2018, and it's projected to be lower in 2020. But what's interesting about this is that the originations of loans are continuing to increase. Actually, there's a 9-year running trend of increase in U.S. loan originations. There are 133 million loans on books, $1.27 trillion, as Lucy mentioned earlier, which is a $570 billion increase from 2010. Also interesting, though, as we think about securitization and the ABS market, which we're going to talk about, is that the loan volumes and terms continue to increase due to customer affordability. And I'll provide you some information. In 2019, right now, 30% of all automotive loans have a term of 73 to 84 months. 40% are 72 months, and 30% are 71 months or lower. So the average of all loans are at 66 months right now, and that's a continuing trend upward, not downward. So why are we up here speaking to you, and why are we part of this group? We're experiencing this space of digital transformation as we moved from the old days, if you will, of calling offerings back and forth with lenders and transacting, moving to the old fax machine, as you can recall, to this full suite of operations of digital retail services, credit applications, menu, e-contracting, and compliance. And as we continue to move forward and we think about this, we want to move from consumer to retailer to RouteOne or others with this complete suite of services as we go forward. From a RouteOne perspective and from the working group's perspective, really now it's how do we advance to the next technology, leveraging this blockchain and or smart contracts. Okay, so I want to deep dive a bit here on where we started our journey looking at these opportunities. And we started, obviously, looking at the operational enhancements, right? The lower cost, the increased transaction speed and transparency and security. When we started this journey, we really started looking into the identity fraud. Why identity fraud? Today, identity fraud is expected to increase 20%. Specifically, synthetic identity fraud is supposed to increase 20%. But as the overall auto lending industry continues to progress, the increase in fraud has gone up 38% in the last 7 years, and it's expected to reach $7 billion by the end of 2019. I'm going to see if they can scroll up here a little bit. But as we moved on, we then thought, no, we want to advance even further. We want to look at the securitization industry as well, and I mentioned those volumes before. While we think it's important to look at the identity fraud, and that will probably be one of our use cases as we go forward, we want to look at securitization. As I mentioned, the volume of loans, I want to put in perspective now what's happening with the securitization market. It continues to increase as well as the number of loans. In fact, the ABS market today is at $163 billion. Up 6% from 2018. Now there's a break between that ABS market, about $130 billion in consumer and about $33 billion in commercial, which is the floor plan side of the equation here. And for the first 4 months of 2019, here's an interesting point. The overall ABS, not just automotive, overall ABS went down 42%. But in comparison, in that same period of time, the auto loan ABS went up by 10%. So the overall market in ABS has gone down, automotive has gone up. And we know with ABS, there's lower risks in securitization market for greater investments, improved prices and spreads, and then the enhanced transparency. So how do we bring that all forward in advancing this in the blockchain technology? Now, many of you are experts in this room about this subject, so I'm going to take it at a very, very high level, and please don't correct me at the end here. But I do want to speak a little bit to securitization and what is securitization and the scope of what we're talking about. Securitization, very simply, is just a procedure in which when the issuer takes a pool of assets and merges them into one group, then they sell those assets and repackage to investors. And then there are several intermediaries, as we know, that we think through this. And in theory, anything can be securitized, right, as long as it's tradable and fungible and there's some monetary value. What are the market benefits? Securitization offers opportunities for investors to free up capital. Incredibly important as we talked about these number of loans that the finance sources have on the books and the increased volume and terms that they have. We also know that it frees up cash. And then the investors, hopefully, and their point of entrance is competitive returns and lower public debt. The participants at the highest level are the originators, the intermediaries, and the investors. And let's not forget, there's that portion here, and while I gave a little bit of an example from the illustration, it's a very simple illustration, it's the regulatory side that we pay close attention to when we think about securitization. Among others, right, you have US SEC Reg AB, and then the Dodd-Frank Act. So as we think about this working group, in my opinion, there's a high degree of emphasis on what we think in terms of the regulation. So as we advance this idea and try to bring it all together, we're really looking to explore the opportunities to enhance this industry, this $163 billion industry. Let me be very clear. We're not looking to replace. We're looking to enhance. And as we think about blockchain, we talked about it's a technology that needs to apply itself to something new. Well, this is something new in this case, right? The overall industry relies very much on paper. and outdated software. And so we believe we can enhance the system with a near real-time immutable digital ledger that adds trust into the system, and trust being the key component. So why blockchain and automotive securitization? We believe that the high level of transparency and data integrity is critical, that the efficiency, right, the lower cost of verification, lower cost of networking perhaps, is incredibly important. Digital versus paper, and I'm going to let them scroll up a little bit more here. He's trying to help me here. The data accuracy, which is the near real-time updates, the data standards and interoperability, and the value, and it's a critical point, the value for both the originators and the servicers, and then the regulation, right? We think the regulation will help. That's a very interesting point in terms of immutable and audible. So it's really not straightforward. And if anyone has taken any time looking at this area, there are many, many papers on this subject. And while there are many papers, it really hasn't advanced itself, right? There's many theories on what we should do from an academic point of view. But we do believe that to advance this, we need to address the following, right? There has to be confidence of all stakeholders that this is a credible alternative to the existing system, not just come and force ourselves upon this when we think about this. We need to recognize the challenges around regulations and not view them as negative. We need to recognize that the regulations will help drive a stronger and secure finance industry and build confidence between the institutions. We believe it will take an unprecedented amount of cooperation to advance this between stakeholders to drive blockchain technology forward. And as we talked in some of the earlier groups, we can build these standards, but if there's not adoption, it will not advance itself. An evolving blockchain and securitization will demand that enterprises be willing to decentralize their business model. I think Michael just put it best, right, in the shark. Right? There's a lot of conflict between organizations, everyone holding everything very close to the vest, and in order to advance this, we all need to work together. And I think most importantly, from a single point of view myself, it's the interoperability, right, and how we can speak to each other and avoid the silo effect as we move forward. So together with the industry leaders, many in this room, the MOBI group, we believe we can advance these discoveries and conversations in technology in a structured environment. Simply taking this very complex, although it's very simple here on the screen, but this very complex sale and purchase of a vehicle and financing, leverage the blockchain technology to securitization. And why do we have the link with RouteOne and the finance source? That was the purpose of sharing all the data, right? The data is flowing through the company today. We have that wealth of data, and we think we can build on that to help bring the data on chain as we move forward for securitization. So in closing, I really do want to invite each of you who have interest in this space, whether it's smart contract securitization, we think about fraud identity. I think there are other use cases we're working on right now as we build the white paper. We're kicking off the working group to begin to explore these ideas. The initial membership, the members that we have bringing along with us, is GM Financial and Hyundai Capital, so we thank them for being part of the team. And we're really seeking your inclusion to advance the standards and leverage the technology. Thank you.
Given the fact that auto loan delinquencies are rising, the origination of new loans and leases is primarily in the subprime sector, right? While using blockchain for securitization is an interesting topic to reduce, administrative overhead, it's really not, given the costs of lawyering, it's not really useful unless you want to go and sell the stuff to retail investors. Have you guys thought about, leveraging actually, anti-fraud, or also, not only anti-fraud, but also making loans more appropriate for people, such that we are not running into the next subprime crisis as we did in 2008? Because I can securitize the shit out of everything, build a CDO squared, and build 30x leverage on that. At 1 trillion already, and over 1.3 trillion almost in the auto loan market. Yeah. 30x leverage is a lot.
Yeah. So I think it's an interesting point of view, and I'll be a little bit careful not to wear my old hat, but my new hat. But I'll give you a point of view on that. I think there was a lot learned through the organizations, right, in terms of the crisis. And I can share with you, and for anyone else who works with the finance arm or the OEM, the models are truly incredible in terms of trying to assess the risk, right? I mean, there's always going to be risk in the portfolio, no matter what. And when you think about the identity fraud, and that's really why I brought that up, I think it's ripe for really some improvement. What you think you're buying and what you think you're putting in that portfolio may in fact not be what you think it is. So while I can't speak to what the finance companies are doing to your original point, I think we do have an opportunity to help here, and as we think through this, and I think that the trust gets built a little stronger. I don't know if that answers your direct question, but it's a point of view.
Just a quick clarification on your point. You're not making any underwriting decisions on behalf of the lenders, so
That's correct.
you cannot be held out and accountable for
Right.
providing loans to subprime borrowers. There's a market for that, and those finance companies are meeting that market. But just to clarify, you yourself and your company are not underwriting those loans directly.
That's exactly correct, and that is a statement about the two hats, right? So while I was at Ford Credit, that was different. But no, we are not underwriting the loans for any of these lenders, right? We're the aggregator in terms of bringing the data forward. Other questions?
So do you want to provide a standard for smart contracts that potentially would be executed in an in-vehicle computing environment? Is that within scope?
Yeah, so I think we're a bit in the midst of writing the white paper here. Lucy and the team really have done a great job getting started. We really want to write the standards, I think, if I'm not speaking out of touch here, for finance and securitization with an expansion into the smart contracts, right? How would we go about that? I think it's still not defined, the entire process that we're going to go through. But the use cases that I've seen so far are exactly what you're saying, right? Write those standards for the smart contracts.